Mic check 1 2 1 2. What's going on, family? If you're seeing this video, I want to give a major shout out to Larry Jones. As you may have heard, he is dealing with his father's funeral and his going away ceremony. So throw a heart in the chat for Larry, hit the like, and let's get right into it. Let's talk about stocks and let's engage with this video and support Larry Jones. The first one that I want to talk about, because Larry told me that many of his viewers are long-term investors. They're not just always trying to get into the in and out plays. So then I love to see that. And if I didn't already say this, I'm Keenan Grace, and I'm gonna be stepping in for Larry Jones and showing him some brotherly love and support. The first banger on the list, and I want you to look this one up yourself. It's called VUG. If you have VUG, type VUG in the chat. Like I said, let's engage. And even if you got to comment multiple times, let's run Larry page up. So let's show him the love and support that he needs. But check this out. VUG is Vanguard's ETF, meaning it's a basket of stocks. Why do I like this one? Because what is performing compared to the market. The overall stock market basically moves up about 10% every single year. Sometimes it's down, sometimes it's up, but over the last 100 years, it's been about 10%. So my long-term investors, if you're doing that, you hitting at least the gold standard, not the silver standard, the gold standard. So could you do better than 10% in a single year? You can with something like VUG. Now, I'm not telling you to buy, hold, or sell, as Larry would often say, but I'm telling you I'm loading up on this one, and I just put in 50 G's into this one. Keenan, but the market is near all-time highs. They did not tell you that VUG is an investment, not a trade. When you invest, you buy more of it, and you stop looking at the dollars, and you start looking at the shares. How many shares of this do you have? Currently, I have about 121 shares of this for full transparency. However, I want to have more, and I can do it one step at a time. 122, 123, because I'm building up until I'm ready to get out of the game totally. I don't have to watch this one like a hawk and watch the charts all day. No, this is one that's building my long-term wealth while I might get into a different account and do some quick trades. This is what's going on with VUG. Over the last 3-year period, it has received an annualized return of 32%. Now, somebody had said to me in a previous video that I did on my channel, and they were like, Keenan, if it's up 32% in 3 years, whoa, no, it's not up 32% in 3 years. It's up 33% 1 year, 33% 2 years, and then 33% the third year as well. Family, when you put that into a calculator and see the compounding, it's up basically over 100% in the last 3 years, because every single one of those years gave you a 32.81% return on average. Family, that's outperforming that 10% that the market is performing. Now, the market been on an absolute heater this year, so the overall market, if you look at something like a SPY, or if you look at something like a VOO, that's up 20%. Maybe even 23%, but this one is up 32%. And when you have significant amounts of money in the market, those 10% differences, family, they mean a lot. Now, in the last 10 years, this thing has averaged an annualized return of about 17%. Family, that's insane levels of return. Not it's up 17% in 10 years. When you look at your account, it's up 17% year one, 17% year 2, 17% year 3, when you average them all the way out for 10 years. But remember, for the last 100 years, the average has been 10. This is almost double the average. So you compound your money with this one significantly faster than in the overall market. And that's one of the reasons why I like this one. But why is VUG moving like it's moving? I already told you that ETFs are a basket of stocks. Think of it like more than one different kind of stock in there. Let's see what it's made of. Let's open up the hood and let's look under it. Apple is 11% of this. Nvidia is 11%. Microsoft is 9%. Amazon is 5%. AVGO is 5%. Google A is 4%. Google C is 3%. Meta is 3%. Tesla is 3%. And then Eli Lilly pharmaceutical company is 2.7%. All of these together and then a little more, they make up the high majority of VUG. And what they're doing is they're taking the stocks that are performing the best and then helping it to run up and make a lot of money. I got another one for you, because I know you're thinking to yourself, okay, Keenan, VUG is already $493, but understand, this is something that could go to 1,000 long term. This is something that could go higher than that long term. So that's why I said it's an investment, not so much of just a trade. But here's one with a lower price than 493. This one is called SPMO. I told you it's time to engage with Larry Jones' video. Either put a 1 in the chat or put an SPMO in the chat if you own it. Let's turn this up. Let's see how many comments we could get on the video. Let's see how many likes we could get on the video, family. If you ain't do it, let's show Larry some love. I think he needs some positive energy. SPMO is moving a little bit under VUG, but SPMO is a banger as well. It could be said that if you wanted to have 2 ETFs in your portfolio and you had VUG and SPMO, you very likely would be outperforming whatever portfolio allocation that the average person has today. So in the last 3 years, it got an annualized return, meaning 30, and then another 30, and then another 30. In the last 10 years, about 17 as well. Now, we like SPMO. When you look at that middle range, the 5-year, this one is actually at 19. Meanwhile, VUG was at about 14. So there's a reason to actually have multiple ETFs because they can pull you up when the other one isn't pulling as fast in a certain time frame. But what's the difference between SPMO and something like a VUG? They're both baskets of stocks, but there must be something different in an SPMO basket. So let's see what's in it. Let's look, and it says that AVGO is the number 1 at 9%, and then Nvidia at 9%, and then Meta is 7% of this portfolio, and then JP Morgan is 5%. So we got our financial mixed in. That wasn't really in the other one. They got Palantir at 4.9%. So if you didn't get in on Palantir or AVGO or Nvidia and you missed out on some of those waves, you would have got in on the wave because it would have been a part of your SPMO or your VUG. You see what I'm saying? How you miss out on some of these stocks that are running like crazy? You don't miss out when you actually in the ETFs that are growing long term. So another one is Netflix. Netflix is 3%. Walmart is on a heater this year. Walmart is 3% of this. Visa on a heater. That's 3% of this. Oracle. And then GE Aerospace is 2%. Family, we love to see these things because they are helping us to be able to make a lot of money on the stock market in a short amount of time. Now, what do I mean by a short amount of time? I'm not talking to the people who thinking short term. I'm talking to my people who are thinking that even 5 years is short term. To some, that might be long term. But if you really think about it, the pandemic just happened. And it started basically 5 years ago, almost 6 years, when everything was locked down. And look at that. If you would have had something like this, you would have been turning it all the way up. You would have been either 2 or 2.5 times richer than you already are right now if these were the only 2 that you bought. And I bring this to your attention to always show you how we can build this wealth in this game. Then, on top of that, and I encourage you to do this in terms of getting your foundation strong. That's why I'm showing you VUG. That's why I'm showing you SPMO. Do you feel like you have a strong foundation in your portfolio? Let me know, yes or no. Like I said, let's get these comments blown up. I want to see if you already commented mad times, comment again. Is Larry going to come by? He going to see all of this. He going to say, yo, they were really showing out for me. But I'm asking you, do you have a foundation? Meaning about 60% of your portfolio at a minimum is in ETFs, whether that be in your 401k, in your regular account, your Moomoo, your Robinhood, your Charles Schwab, your Fidelity, whatever. Whether it be in your Roth IRA, is at least 60% of your money in something like these ETFs. Now me, the answer is absolutely yes. And the high majority of my money is in VOO and VTI. However, I have a lot of that, and now I'm transitioning over, not selling, but adding to my VUG and my SPMO so I can turn it up. Family, I love y'all. I appreciate y'all. And shout out to Larry, and we're going to keep Larry prayed up, family. I love y'all. Share this video with somebody so that they can learn too about how to build wealth long term. And subscribe to Larry's channel if you haven't done so already. I see y'all in the next one. Again, Larry, it's love. Take care.